Hey everybody, Boris, last week PK Forex. Happy New Year to everybody out of Pepperstone, down under. And we start weekly technicals for January 8th to January 12th, 2018. Still the same story as before the New Year's. Dollar still in the doldrums. I think the most interesting story over the vacation has been the fact that despite strong US data, the dollar cannot rise, especially in dollar yen. We'll take a look at the charts and everything else in a few minutes. But the big story, I think, sort of on a fundamental level, has been the fact that the market does not believe the Fed is on a 3-rate hike path in 2018 so far. And the primary reason for that, of course, is that despite the fact that we have strong economic growth, we have literally no serious wage growth. And because we don't have strong wage growth, we don't really have any kind of inflationary pressures, and the Fed is certainly going to be loath to raise rates against an environment where workers' incomes are not rising. So we're still very much in that dynamic. And of course, the interesting thing I think that most people are really not accounting for in 2018 is the idea that the growth may have peaked, and that indeed, if growth has peaked, then certainly wages are not going to catch up. In fact, the Fed may have to stay stationary for much longer than anybody anticipates. That's a scenario very few people are looking at in 2018, and it could very well be the story. In the meantime, certainly the FX market is considering that, and the dollar remains very much at the low end of its spectrum. So let's take a look at the levels first, then we'll take a look at the calendar, and then we'll look at the charts. The levels have actually risen for the euro significantly. Euro now is within 3-year highs, very much close to 2100. But we're going to take a look at the charts here, and I think it may be a little bit hard for it to make that move just this week. Dollar yen really just stuck in this 1400 range for the last month and a half, and more importantly, has failed to break out to the upside. If we start trading back down towards the 112s, a break at a 112 is going to be a very, I think, significant negative event in a dollar yen path. And cable hovering around near highs, actually trading relatively well. Don't have a lot of data this week, but the story with cable is that it's kind of on pause now because the Brexit negotiations are essentially on pause for a little bit. They're going to come back into the forefront end of January when that heats up. It's really going to be very much a political story. The short, sweet story out of UK as far as the economic data goes over the vacation has been this. Demand is relatively decent, data is pretty good, but businesses are scared stiff about the fact that there is no deal on the table. So I think those pressures are going to begin to percolate much stronger as we go forward, unless they can come to some sort of an agreement, in which case we certainly have a very easy path towards the 140 on a relief rally. So anyways, let's take a look at the calendar here and see how everything sets up. It's a much quieter calendar this week than it was last week. Second week of the year, we only have essentially just a modicum of European data, which really doesn't even matter. We have industrial production, current account data out of Europe. None of this is going to be market moving in any way, shape, or form. We'll have industrial production, manufacturing production, which was a little bit lower because of UK manufacturing GDP. And the visible trade balance, that's actually going to be a good look here, because if the trade balance starts to balloon out, that could be a problem for UK as well. So we'll be watching that a little bit carefully. And then really the only data of any import, but it is a serious import, will be US data end of the week. We have the PPI coming up on Thursday, but much more importantly, Friday is the only really tradable data day. Will be the inflation data, because we have CPI and retail sales. And the retail sales number is, of course, very, very important, simply because that's really the strength of the consumer. You're betting on the fact that you have a 3% plus growth in the U.S. economy. It's impossible to bet that with the consumer not catching up by doing a hard spend. And I think the spend is actually going to be problematic. We'll have to see how much spend there will be in the consumer. So that's going to be really the much more interesting trade as we come to the end of the week. In fact, the only trade for the majors as we go. So looking at the charts here, and you can see this is the euro. It's a weekly chart on the euro, actually. Very, very strong move. Really nice. The uptrend still preserved. But as you can see, we kind of backed off the highs. Now, this was today's action, really, because the NFPs were mildly, I guess you could say they were, they weren't horrible, but they were good enough to kind of knock the euro off the highs. We failed several times this week. As a matter of fact, let me go to the dailies. I can show this to you a little bit better. Failed several times this week to make that 21 break, right? So we just kind of we're in this 20-21 zone and remain in 21-21 zone. It's very possible that we could have a little bit of a correction back down below 21 in the euro. The euro still remains very much in an uptrend, really, unless and until it breaks the 11800. So a corrective move all the way down to 1800 is still going to be relatively bullish because it's going to still maintain higher lows. But I don't anticipate it for it to drop back that far, especially in a low environment, a low news environment like we have now. Overall, the market really looks like it's bid euro, and it's just simply a matter whether it can push itself through the 2100. Now, if we do take out the 2100, this is a very, very important level. And actually, I guess my point is, at this point, I don't want to be long euro. We were long euro last week, actually, made a little bit of money, but I don't want to be long euro now until and unless it proves to me that it takes out 2100. Just because the prospect of shorts, playing a double top here is so strong they could easily knock it down, and the momentum just simply takes us down to 1900. So the trade to me is a breakout of the 2100, a hold 2100, and a hold of that will certainly be a very, very powerful move. Let's look at the charts here. We got to go all the way back to 215 before we were at 2100, and then once we get into that 2100, it's really 21 to 25 that becomes the big zone. So there's room to run here. Overall, of course, the chart still looks very, very bullish. But as I said, I really want to wait until euro takes out 2100, and it may take us a week or two, or it may take us a day or two. I really don't know how strong the flows will be next week to kind of gauge it. But until and unless we do, I think the euro at this point is a pause, and you want to back off the trade, because the prospect of a corrective move here, just simply because the failed double top action, is pretty strong, and I really don't want to be buying until and unless I have the double top broken. So that's the story in the euro. Now the yen, a completely different story. Just the look at the weekly, by the way. Look at the low vol. I mean, this you might as well just fall asleep if you fell asleep at the beginning of September. You had no changes in your portfolio. You could have been levered 50 to 1 in September, and you still wouldn't have had a margin call one way or the other, which just goes to show you how low volatility has been in dollar yen. But looking at the weekly here, we're just basically consolidating this 113, 112 level. We have to go get a little more granular on the dailies, and see that the 12 really seems to be the key support, right? So we failed on the breakout above the 1300 a little bit. We'll see how well we trade at the beginning of next week. For now, the absolute key range points is 12 to the downside, 14 to the upside. I think, again, same kind of a situation. You're in the middle of a range. There is 50-50 proposition. It goes one way or the other. It's not a kind of trade you want to make. You want to have some confidence in either momentum or a breakdown. And until the market shows us one way or the other, I would just simply observe to the sideline, because there's just no clear technical signals here. We're just in the middle of a range. You could, if you're a bull, you could just simply make the argument, hey, we're holding the bottom, and I'm just going to close my eyes and pray for a run, given the fact that fundamentals are behind me. But I really would love to see the 1400 break, because I think if we do break the 1400 this time, it'd be a much stronger, much more robust break, because it would show prices behind the fundamentals, and then we could go higher. The prospect of a failed move here and break down below 1200 is still too strong for me to want to get a trade in at this point. And cable also holding very nicely against the post-Brexit highs right over here, but not much data. We'll have to see how much. It feels like it ran against into a lot of juice here, a lot of resistance at this 36 level. We'll have to see how much. It really becomes in many ways an anti-dollar trade, right? A lot of these moves are less about the euro or the pound as much more about the fact that the market is just not bullish dollars. Now, people ask me, why would the dark market be not bullish dollars given the U.S. economy is growing, blah, 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 so on and so forth? Well, as I said, one reason is because the market is just not buying the Fed rate hike story. The other possibility is that the market is looking at the tax cut not as a boon to the U.S. economy, but as a massive deficit blow, right? If you think about what the tax cut is doing right now, it's a very uneven distribution of income. We still don't know. We really, really don't know how much income flow will come into people's hands. But sort of just the natural distribution of the plan shows that only the top 1% are going to get something like 80% of the income flow. That is not a way to stimulate consumption, right? If you're betting on the fact that that's going to create 3-4% GDP, 1% of people don't buy 90% of cars. They don't buy 90% of houses. They don't buy 90% of furniture. So the money just simply either gets circulated back into assets or stays relatively dormant, and that does not create the kind of GDP growth you're looking for. Conversely, with the budget deficit blowing out, markets are much more sensitive to that factor. We could be seeing just simply anti-dollar flows on that. So kind of interesting. I think the market is sending us some clear signals at the beginning of the year. They're worth paying attention to. Maybe they're completely wrong, but they're certainly worth paying attention to because they are signaling to us that all is not well with the dollar, and we should be focusing on that well. So what would make me really, really long pound here is the strong break through the 37s, just like the strong break through the 121s. All of that will just signal a strong anti-dollar view of the market, and you want to join that as the week progresses. Wish you guys the best luck, the best of trading. Boris Schlossberg, over and out.